Hello guys, welcome back to FinTech. So today we will bring you another episode of Raven Watch. So basically what we do in this series is we kind of look through what happened during the week, and I would share my market insights and perspectives to you guys, so you guys can kind of backward and think about what's going to do with and what you're going to trade in the next month, or probably next week, or I don't know, maybe next day. It really depends on what your investing spectrum. So today we kind of look back what's happening, and we are seeing a lot of different things. We're seeing China GDP releases new high, which I totally would question the authenticity of the figure, and I will explain why later. And because right now we will be able to see that China in the first quarter of this year China hasn't been performing well in attracting foreign direct investments and also capital inflow. So on the other side, we're seeing massive capital outflow from China mainland. So how is Chinese GDP is able to keep at such a high pace? I would question this is merely a Ponzi scheme, all right? Because, if you look at their statistic bureau, they've been repeatedly faking their data for a long time. A lot of people ask me some questions, because I have been living in China for around 20 years. So I talk to the government officials. I have friends who are in real estate development, also in Hong Kong. So they'll be able to, kind of share about some insights of what really happened inside this black box. It's most of the real estate developers, they have this profit margin of 20 to 30%, but now these profit margin is increasingly shrinking. They're not real estate developing was one of the most profitable business model in China, but now real estate development is becoming less and less profitable. That's because the government is requiring and demanding more of the profit share, and at the same time, because the government is so afraid of the housing bubble is going to collapse, so that's why they trying to limit the transactions, right? They have this policy called 限售限购, which means they prohibit you to buy, and at the same time, they prohibit you kind of to sell your real estate. And that's because it is sort of like a stock market, right? If you're really afraid that your market bubble is going to collapse, what you're going to do is you're going to try to limit and tell the short sellers please and ban their account, increase the margin, the margin, and also increase the borrowing cost, increase the basically increase the borrowing cost of shorts, because we have to borrow stock to sell, right? That means if the government is increasing those kind of interest rate and also the borrowing cost, that means we are paying more to short a stock, and that would really further limit the short sellers from shorting more shares from their perspective. But this isn't true, because as far as we have observed from the market, simply limiting short sellers is not going to help the market at all, because most of the time short sellers end up becoming the only people that's buying shares when the market is collapsing, because if the market collapses, everyone would be selling. Like, no one's going to buy. If you're creating a short selling position, you're in the same time, you're creating kind of like you're creating a synthetic long. That means you have to buy back the shares when the price is hitting low, because you have to buy back the shares and return it to the funds, or maybe the institutions who borrow you with the funds, who borrow you with the shares. So that's the idea. Every time when you're short selling something, you're creating a synthetic loan. That's a simple concept, but yet the government, like in the emerging market, these government dictators hate short sellers for various of reasons. And every time when they try to ban short sellers, you end up no one's buying in the market, and the market crash even further. And that's pretty bad. That's one perfect example of how one of these so-called politic tyrant really they don't really have a clue of how the economy is actually operating. The only thing that they know is how they're be able to maintain the control of the political party. Okay, so moving back to our topic, which is real estate development. The government been releasing all these aggressive policies for a long time, and they're trying to limit the liquidity of the housing market by banning people from selling and also banning people from purchasing. Of course, the government is not going to admit that. They are not going to admit that they have excessive leverage in the real estate market, and they would never admit the fact that they're trying to ban people from buy or selling, because what they're going to tell you is, well, if you are the resident here in this province, you can purchase one, maybe one more, and that's the most you can purchase, right? If you already have some houses under your name, so you cannot purchase another house or maybe real estate. So that's the way they kind of phrase it. So a lot of people would they'll be like, oh, these Chinese housing bubble isn't as fearsome or dreadful as you have described. You're just being kind of way too pessimistic. But to that kind of argument, I would have to argue with that, because this is what the Chinese government want you to see. They want you to see that there is no liquidity and leverage. There's no leverage in the housing market. In the same time, they want to show you a rapid GDP growth, but you're not seeing Shanghai Composite Index going above. You're not seeing Shanghai Composite Index going above like 3,500, right? So that's a very, very tricky situation scenario. That means they don't want any leverage. They don't want the stock market to have excessive bubble. They also don't want that to happen with the real estate market as well, because apparently, all these money in China flows to commodity market, real estate development, flow to stock market. So when you have an economic system that's full of leverage, and you have a lot of banks that recently and financial institutions getting defaulted, and this is what's going to happen. I'm not saying American system is way better, but if you look at what happened with the United States history, you see what happened in 1929, the Great Depression. You see what happened in the dot-com bubble, and also 1987. You see all these market crashes. You know one thing, yes, the government intervened, but the government gradually learned that short seller would be a crucial part when it comes to stock market crashing. So most of the government or the political leader like to shift the blame to the short seller by saying we're greedy, saying people like that, just being like going against the entire market and really kind of quote unquote destroy the market. But we're that kind of people. Short sellers have our functionality in our financial market. So as we can see here, and S&P and also the Nasdaq, I believe right now we're heading to a top, right? So we're heading to a top right now. As you can see, you can find these easily on any like tradingview.com. You see a lot of good traders posting their views. And right now I'm extremely bearish on S&P 500. I already built my short positions, and also I'm extremely bullish on gold. Right, again, right, like every time I'm a gold trader. I trade a lot of gold, and I make a lot of money out of gold. So right now I can see there's another momentum shaping, and it's quite easily that we're going to see another wave, and we're going to see the gold price breaking out. And I have built my gold long positions I guess a week ago, and I'm also built my VIX long position as well. And right now, this is what happened in the financial market. Some of I believe right now the market is heading towards a quite a large scale of a correction. As commodity side, like a lot of people keep saying, yes, you have inflation, but the problem is those policy going to bring real economic demands increasing or boosting in the entire financial market system? We would put a question mark, right? So that's the reason why I'm bullish on gold. I'm bearish on the index. Again, like most of the traders find it way easier to short gold price rather than long gold price. It's basically the same thing as you're used to short volatility index instead of long volatility index, because the previous one requires more of authentic skill when it comes to judging the signal. The later one is kind of like a massive trend you just have to follow, right? So I think that's the biggest difference between that you're being a gold long, you're being a gold bull, or being a gold bear, right? That's a totally different logic, and it requires totally different skill set. So I believe this is some of the key area I want to cover in these episodes. Like I really want you guys to subscribe to my channel, and also press the thumb button for me, and also click that bell for me, so you're able to get all the new information from my YouTube channel in time. They will send you a noticement, so you'll be able to see that from your inbox, from your YouTube account. Sometimes for mysterious kind of reasons, it's sort of maybe because my content's a bit politically sensitive, so that's why sometimes you may not be able to receive my my info and also those notifications from the YouTube channel. But anyway, please enjoy this content and happy trading, and I'll see you in next episode. If you want to share any of your opinion, please comment in the section below. I will interact with you. Okay, and you can also join our Facebook page and also our community that I have another community called 知识星球. You can just pay a small sum of money, but join, but you'll be able to get a lot of insights, a lot of my trading insights and a lot of information there. Right, okay, see you guys. See you in the next episode.